Yes, good morning, good afternoon, good evening, wherever you are in the world today. I hope you are okay. Now, with regards to where we left things on Friday, I got into a position over there on my demo account. The position crawled over, went to stop loss, and then consolidated and went back up again. For the comedians in the crypto world, that would say that's a reverse bot, um, what, I don't know, trading pattern, if you want to call it that. But why I'm bringing this up is because on Friday, I opened up a position on my demo account, but I didn't open up one on my real life account. Okay, so for those who are going through the world of live trading, and for those of you who just love trading and getting into trades and that sort of thing, which is kind of what I'm guilty of. Like, I love trading, I just love it so much. The recommendation I have is to have a demo account. You can see here FTMO demo 2. It's waiting for it to load, I think. There we go. And then you have a live account. Okay, so this is where I got into that position, and that's where I got stopped out. Market did a little dance and then went back up again. So how that looks on my history is that $2,000 hit the minus sign. These little $10 ones are just related to programming that I'm doing at the moment. So I'm just testing it. So that's not real trades. The two trades I've had on the demo is the 3,000 win and then the 2,000 loss. So still up 950 on the overall profit without open positions, and then up 1,300 for open positions from today. I open up there, price went up, almost at target. So I believe that'll be about $2,000 profit if it goes back into the history tab. Sorry, my brain's a little bit dried up today. We had a very festive Mother's Day yesterday, and I'm just trying to get through the day today. To be honest, tomorrow I'll be a bit more bright-eyed, bushy-tailed. All right, so, but the point being is that on my live demo account, because I did open that trade here, it wasn't the perfect trade. I kind of just opened up the trade just for having a trade open. Well, let me just speak to that for a second. So sometimes I do that. I like to have a trade open just so I know what it's like to be on the field. So what I mean by that is when you're observing yourself on live market conditions, and I'm talking about theory, I'm talking about having an open trade, being with the market, being sensitive to almost every move that it's making, all that kind of stuff that a trader has to go through. I prefer to have an open position because the mindset and the feel is a lot different to that of just watching charts and watching the candles kind of move on by. So it gives me like a better grasp of what the market's up to, a better feel, if you will. And then over here is my live account, and this is where I would play things more not chilled, more reserved. And you can see about the history over here. I got my $250 close or win last week, and then my open trade I think's bobbing up and down from $700. I think this one's going to take me up to about $1,500, just in terms of, well, maybe $2,000. So, which is pretty cool. Like, it's all in a day's work, right? Having an open position, allowing it just to cook in there, and then the next day closing off for about $2,000 profit. Yeah, $2,000 can buy some things. I mean, $250 maybe like a good meal or something, but when you're closing $2,000 every other day, you can start taking care of some serious stuff like bills and fees and outgoings that most guys have to take care of every month. So it just shows you that there is the possibility for traders to make this a full-time thing, but you just got to do it the right way. You got to know when to enter, what to do whilst you have an open position, and then when to exit. I'm currently working on an algorithm to close the positions for me so that I don't have to keep on checking price every hour to see what the market's up to. I know you got to trust the strategy and stuff, but there's still that side of me that I actually check in, and I want to minimize that and take that away. And that's why I'm coding the algorithm right now for it. And then still, once I've got that implemented and tested and working, I want to return to my AI project, which will focus on opening the position and actually basically doing everything for me. But just for the time being, whilst I'm manually entering trades, I will use that algorithm to close that off. Into the market over here, just to kind of surmise what I just said. So even if this wasn't the perfect trade, it's got absolutely zero impact on my real life trading. And the reason for that is because I took the impulse of having an open trade, put it into a demo account, and then closed it off. Or it closed itself, and actually got into a real life trade over here because I saw there was something coming up, and then $700 profit for now, but looking for it to get into the 2000 range in the next 36 hours latest. Or maybe my algorithm will be built by then, and then it could go even further. I prefer the algorithm that I'm building to a OCO, which is I don't even know what OCO stands for anymore. Order cancels order, I think it is. And a trailing stop loss, because there's these weird things that can happen, whereas the algorithm I've got won't rely on those kind of weird things. It'll just work on a tried and tested method that confirms certain market movements according to the MTOPS strategy. Oh man, I closed it by mistake. Let me see if I can bring it back. So basically, if the market just bunny hops into position, we still can use the same scaling from the same side transition, and therefore you don't really have to do too much work when things are moving across. So for this reason, you can see here, this is the first time I'm moving across, by the way, that the launch happened off the 2/1 line, that line where my mouse is, and on the arc 2. And I really just haven't done anything. I just moved the tool across. You can see all the interactions on here, perfect, and now it's on its way up, trying to find some form of comfort. I think either on the ghost line that sometimes gets utilized between the 1/2 and 1/1, or just etching itself up into this range, which I'd be quite happy to see, because that'll benefit my open trade right now. Yeah, and it's the same thing that applies over here. Once you've got a lower low, don't ignore it. It's business as usual. You got to work from absolute lows or absolute highs. But the good news is that because it's scaled based on the previous same side transition, you just quite easily move it across. That's now in play or in its spot. Bring that over. Bang. Yeah, I won't keep this video on for too much longer, because I'm putting myself to sleep just hearing how monotone my voice is right now. But I will get back to the show as usual tomorrow. But before I do so, I suppose I just want to make sure that everything looks good here. Turning point 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to 1. So according to the setup, 1 will happen in the next cycle. So it'll be quite a decent travel to the upside. And then, of course, if you're working with an uptrend, so we've got a lower high over here. Still waiting for it to confirm itself. Maybe what we've got is a symmetrical triangle. It's actually something worth checking out, in fact. So if you're not caught into a symmetrical triangle, which is a triangle that's crawling across, so that it's got a bit of market launch point, then that should be the play. But if we are in a triangle, which is something I kind of forgot about when getting back into trading not so long ago from coding, and they caught me off guard. So I'm going to just make sure that they aren't. They're waiting to catch us. So yeah, this is kind of a forced symmetrical triangle. It's not completely symmetrical. As you can tell, the interaction points are there and there. So if we had to put a line at the inflection point, go back and halve it, that's symmetrical. It's not necessarily symmetrical. It's an inclining direction right there. And just coincidentally, that touches up. And the problem about things like that, for example, touching up, is that people start to think that they've stumbled across some geometric kite superpower, blah blah, and they start telling other people about it. But it's just coincidence. Like, don't get overly excited about such things. But anyway, so yeah, that's not symmetrical because that's at a upward facing angle, and that means that I'm going to just kind of go back to that being the next range in which price is trying to get towards, and that'll happen kind of about the 24th. Oh, sorry, the 20th. Today's the 3rd, so it's going to take us all week, I suppose, to get across there. Which means that I'll keep an eye out for turning points here, close it off, let it reset, and ride it back up again. Have a good one. I'll catch you in the next one. Ciao for now.